Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Sean Brodrick, senior editor at WeissRatings.com. Welcome back to the show, Sean.
Thanks very much for having me on.
Sean, gold is doing outstandingly well. Just how well?
Well, we saw gold hit a 9-year high. We saw silver hit a 10-month high. There's a lot of things driving it. In fact, I just gave a presentation for the Money Show for an online webinar on Wednesday, and you can find that on their site, I think. And I talked about many forces that are driving precious metals higher. Two things that seem important is that we are seeing U.S. ETFs just take tremendous amounts of gold in now. People are buying gold and silver through ETFs. In fact, the big gold ETFs took in more gold in the first half of this year than they did in all of 2019. So we have, I guess you call that institutional demand, or else would you call that investor demand? In any case, we have that. The other thing is negative interest rates. I mean, the entire U.S. yield curve, when you look at real rates, that is, when you figure in inflation, it's all underwater now. So that takes pressure off gold because, do you want to lock your money up for 10 years when you know that because of inflation you're going to lose money on it? Or else would you rather take a chance that gold will go higher and at the same time you have protection against the wild fluctuations in the market? So I think that's a choice that a lot of people are making. And it's been terrific for our gold names. Everything in our gold and silver trader portfolio is up. Even the stock we added yesterday, because I added it in the morning when we had that pullback. You know, I said, well, this pullback isn't going to last. Sure enough, it didn't. And so that's pretty much what I would recommend anyone. Buy the pullbacks. We are in a big, serious precious metals bull market. And so I know it's hard for people to buy when gold is at $1,800 and change, but just wait for a pullback, have your shopping list ready, buy half of the complete position you want to buy, and then see if it pulls back further, and if so, you can average down. If it goes higher, then you can average up. But that's basically what I would recommend doing right now.
Are you surprised that silver hasn't gone up more than it has? And you mentioned that it's hit a 10-month high.
Well, silver is outperforming gold percentage-wise, and silver miners are outperforming gold miners, and gold miners are outperforming the metals. So it all depends on what you want. One thing is there's so few silver miners. I mean, it's very, very tough to find one. I mean, I own most of the good ones, though I plan to buy more. Just because no one wanted to build a silver mine for the longest time. I mean, it just wasn't worth it. Now we have to play catch up, but that takes years and years and years. We hit peak silver a few years back, you know. We're probably at peak gold right now, and again, you can't bring a mine online quickly. It takes years to do that. So we'll probably see gold production from mines actually go down next year. And so with silver, I mean, should it be over $20? Sure. But it'll get there sooner rather than later, I think, because like I said, it's a big bull market. What could hurt this bull market is if interest rates go up, because that'll raise real interest rates, and so that will be problematic. Or if they come out with some kind of vaccine for the COVID-19 coronavirus, because a lot of the buying that's been into the metals has been due to fear about the spreading pandemic here in the U.S. However, one more bullish thing that we need to talk about is that right now the people in the White House and in Congress are watching the economy kind of hobble along, and the only thing they can do, the only thing they can think to do, is to pump more money into the system. That's their reaction to everything. So all that basically free money has to go somewhere. And it will go into stocks. We're seeing tech stocks run up enormously. But it's also going to go into hard assets. So that's yet another tailwind. And so I think people should let go of fear, make a shopping list, buy the pullbacks. That would be the best thing to do right now.
Are the junior gold miners still a good bargain?
I'm finding some. Yeah, there are some great bargains. There are great bargains in the junior space. I think one thing people might want to look for is those companies that'll be bringing a mine online within the next year or else year to 18 months. They have a timeline to production. Those will probably catch some real speculative froth sooner rather than later. So it'll be a good trade. Is it a good investment? It depends on when you buy it and how frothy it is. But if we're in a major bull market again, and it seems that's where gold is right now, then this will likely continue for years. And so you'll see all sorts of good opportunities come and go.
Is there a shortage of physical gold and silver?
No, there was for a while because they couldn't get gold from the mines where it was being mined to the markets due to different COVID-19 restrictions. They just, either the flights it was flying on was canceled or other problems cropped up. That seems to have gone by now. In fact, U.S. imports of gold in the first 5 months of the year were up something like 689% over the first 5 months of 2019. Don't quote me on that exact figure. You'd have to look that up. But the U.S. commerce numbers came out, and it's eye-popping. So there's plenty of gold here. It's mostly going into the ETFs. Now, one more thing about ETFs is we have to remember they boost gold prices on the way up, but they weigh on gold prices on the way down. If anything, ETFs have made gold prices more volatile because whichever way gold is moving, the ETFs will get out there and shove. So that's another thing to keep in mind is that when this eventually runs its course, then we'll see the ETFs start to sell again, and then we'll have prices move to the downside quicker than many people will think.
We'll have more with Sean Brodrick right after this.
Cypress Development Corp is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Media recognition from Bloomberg, Reuters, Recycling Trade Publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with Sean Brodrick. Sean, what's happening with crude?
Well, we had some what should be bearish supply numbers come out today. This is Wednesday when you and I are actually speaking about this, and the Energy Information Administration reported a build of 5.7 million barrels in the week to July 3rd. And that puts our inventories, I think, up around 19% over the same time last year. So that should have been bearish. However, oil prices went up. After selling off initially, they went higher. What does that tell you? When something goes up on what should be bearish news, that's generally bullish. One thing I think that's in oil's favor is we're seeing shipments really fall from Saudi Arabia, from Russia, from places like that, there's much less shipment. So people are, and also there's less pumping in the U.S. oil fields. They've already entered their recession there. So people are looking at the future and just putting in bids now. It might be premature. I'm just playing the oil sector for the big fat dividends now, trying to buy stocks that I don't believe will cut their dividends because they actually got sold off down to great prices. So that's the way I'm like actually playing it. But if I was looking at energy stocks that didn't pay a dividend or were in risk of cutting their dividends, especially, I would only do it for a trade. I wouldn't do it as an investment because we're probably going to see a lot more incredible volatility in the oil space this year.
Is there major concern with some smaller fracking companies going under?
Well, yes and no, but it's really the small oil producers that do fracking. In a weird series of events, the oil services firms are actually able to charge higher prices, which is complicated. But you would think that if prices stay lower for longer, then some of the smaller oil services firms could be in trouble. But you can still bet on the big names. They won't be going anywhere. Schlumberger, I was just looking at that today. It's up 52% off its lows, but it's still 56% down from its highs. So do you want to buy it now? Well, it pays a 2.75%, it pays a 2.75% dividend yield. And so that's probably not in trouble. So if you're looking at it as a discount to where it used to trade, you'll say, hey, I can pick it up for this nice dividend, and it's a strong business, and it's not going away. If you're a pessimist, you can say, well, the thing's already up 52%. Maybe I'll wait to see if it goes down and has a retest. And it's still good. But it's not going away anywhere. So that's the way I look at it. Like, if you want to play the oil services space, I would play one of the big names that has a lot going for it.
We'll have more with Sean Brodrick right after this.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Sean Brodrick. Sean, is anything going on with uranium?
Oh, heck yeah. We're back in. Because Kazakhstan extended its shutdown of its mines because of the coronavirus. And so that is huge because now we know that country supplies 40% of the world's uranium, or at least it does in normal times. But those aren't the only mines shut down. We saw Cigar Lake shut down up in Canada. We saw Olympic Dam shut down in Australia. There are mines that shut down in Africa. So you put it all together, and there's a lot of production being taken off the table. In the meantime, a whole bunch of utilities didn't have things covered because the way things have been going, they could always buy for cheaper in the spot market. That's changing. And so I think people should be looking at the uranium space. We are too. I don't want to mention which specific companies we're buying because I think your organization doesn't like that. But I think people can look at uranium stocks generally and find one that works for them. And there's some good names. There are some values out there that I think people should be looking at.
Sean, anything else that's caught your eye lately?
Here in the U.S., now you have to understand you're in Canada and you have the pandemic pretty much under control. Here in the U.S., it is getting worse. So there are good investments in that area. One thing that I just put my subscribers back into is a company that makes protective gear, because it looks like we'll be using a lot more protective gear for a lot longer. So that's naturally, something you want to be in. There are other health-related names that one way or another are actually helped by the coronavirus. There are tech names that are also helped by the coronavirus. So I think people can put that into their plans and just expect on this lasting for longer. Whether you believe it's real or not, by the way, there are plenty of folks who say it's overhyped. So you can hold that opinion too. That's not my opinion. You're certainly entitled to yours. But I don't think people should give up on that industry right now, because there's a lot of good names to play around the coronavirus. And if this crisis lasts for longer, as many people think it will, then they still have a lot longer to go.
Sean, thank you so much for chatting with us.
Thanks. It's been great.
My guest has been Sean Brodrick, Senior Editor at WeissRatings.com. If you have any questions for Sean or any of our other guests, you can send them to info@HowStreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.